Good day, everyone, and welcome to this IBC Advanced Alloys webcast call and conference call. We're going to discuss today the company's most recent fiscal Q3 earnings for the quarter ended March 31st, 2021. I'm Jim Sims, Director of Public Relations and Investor Relations with IBC. Before we begin today's webcast, just a couple of reminders. Slides from today's presentation and the audio of this call are being broadcast live over the web. A recording of the broadcast is being made and will be available on our IBC's website later today, located at www.ibcadvancedalloys.com. After our formal presentation, the company will take questions from webcast participants. Now, during today's presentation, we will be making forward-looking statements, and viewers are cautioned not to place undue reliance on such forward-looking information and statements. Additional information identifying risks and uncertainties are contained in IBC's filings for the 3 and 9 months ended March 31st, 2021, and that's available on our website and on SEDAR. Joining us today is Mark Smith, CEO and Chairman of the Board of IBC. Mark, thanks for joining us. Please proceed.
Thanks, Jim, and welcome, everyone. Let's go to the key points of today's presentation. Here is a high-level summary of our financial results for the quarter ended March 31, 2021, which we filed earlier this week. I'm very pleased to report that IBC broke through to profitability in the quarter, driven by higher sales and improved margins. Consolidated revenue increased 110%, and adjusted earnings before interest, taxes, depreciation, and amortization, or adjusted EBITDA, rose by 151%, both as compared to the immediately preceding quarter. Income in our Copper Alloys division of $205,000 was 109% higher than the prior year period. Our Engineered Materials division, where we produce specialty beryllium alloy products, had income of $490,000, which was 84.9% higher than the prior year quarter. All in all, it was a very good quarter, and it continued the positive post-COVID upward momentum that we saw in the previous quarter. In our EM division, continuing strong demand for semiconductors boosted sales by 14.8% year over year. What is largely driving that demand growth is the ongoing global build-out of 5G networks, as well as the intensifying use of computer chips in vehicles, data centers, appliances, and other components of the Internet of Things. Year to date, the EM division posted income of $579,000, which is a 916% increase over the prior year period. After years of hard work, ongoing investment, and a lot of patience, I think we're finally starting to see our beryllium alloy division really start to take off. I'll provide more on this later in the presentation. Consolidated gross margin improved to 30.5% in the quarter as compared to 17% in the preceding quarter and 19.9% in the prior year period, with fixed costs being spread over higher sales volumes is what helped. Copper Alloys gross margin also improved, rising to 20.5% from 10.6% and 14.1% in the preceding and prior year periods, respectively. The EM division's gross margin expanded to 45.6% in the quarter as compared to 26% and 32.1% in the preceding and prior year periods, respectively. Finally, we're pleased to report that we have launched our planned expansion and modernization of our flagship copper alloy facility in Franklin, Indiana. As we consolidate 2 legacy copper alloy casting facilities into our Franklin plant, we expect to increase production capacity, support higher sales, and achieve substantial cost savings. Here you can see the very nice upward trajectory in consolidated revenue, adjusted EBITDA, and comprehensive income that started for us in this previous quarter. In my view, this clearly shows IBC is on the road to making a robust recovery from the economic lows driven by the pandemic. Now, looking more closely at our EM division's quarterly performance, income of $490,000 was 85% higher than in the comparable prior year period and was 183% higher than income in the quarter ended December 31, 2020. Sales of $2.2 million represented a 14.8% increase over the prior year period. Gross margin expanded to 45.6% as compared to 26% and 32.1% in the preceding and prior year periods, respectively. Adjusted EBITDA of $835,000 was 66% higher than the prior year period and was 111% higher on a sequential basis. Year to date, adjusted EBITDA for the EM division rose to $1.4 million from $796,000 in the prior year period. That's a 74.1% increase. Here you can see the EM division's performance plotted over the past 3 quarters, with steady increases in revenue, adjusted EBITDA on the left, and comprehensive income growth on the right. These are growth curves that we all like to see. The 5G communications infrastructure requires a much higher number of semiconductor chips than legacy technologies, and the ongoing build-out of this network is increasing chip demand very sharply. Coupled with the increasing internet connectivity of durable goods like cars, refrigerators, HVAC systems, and whatnot, what we call the Internet of Things, this has pushed demand for these chips beyond current global production capacities. IBC makes beryllium alloy parts that are all but essential to chip manufacturing systems, and so we too have had to respond to sharply higher demand because of these trends. The growing use of microsatellites and other orbital platforms is also presenting IBC with growth opportunities, as beryllium alloy components can serve absolutely vital roles in these systems. On the defense side of our business, more and more defense contractors are outfitting systems with high precision, state-of-the-art electro-optical sensors in order to maintain an advantage in peacetime operations and in battle. The beryllium alloy parts we make are key components that enable these electro-optical systems to achieve extraordinary clarity and reliability at long distances. I should also note a key competitive advantage that we have over the competition: the many benefits of our near-net shape casting technology for beryllium aluminum parts. This capability allows us to deliver products faster and more efficiently and more cost-effectively than our competitors. I'm happy to report that more and more inquiries from existing and new customers are coming in now because of our technology and manufacturing capabilities. Turning to copper alloys, I'm pleased to report that this division was also profitable in the quarter, with income of $205,000. That was a 110% increase over the prior year period, and it reversed a loss in the quarter ended December 31, 2020. Sales of $3.3 million were 13.8% higher sequentially than sales in the preceding quarter. Year over year, sales in the quarter were not as high, but as investors may remember, the copper alloy division posted exceptionally strong sales at the start of 2020, coming very close to $4 million for that quarter. The upward trajectory we saw at the start of 2020 is our target for a return to growth for the copper alloys division once the effects of the pandemic are fully past us. Gross margin rose to 20.5% in the quarter as compared to 10.6% and 14.1% in the preceding and prior year periods, respectively. Adjusted EBITDA of $150,000 was lower year on year, but reversed a negative adjusted EBITDA in the quarter ended December 31, 2020, again highlighting our positive post-pandemic trend. As you can see here, copper's recovery from the pandemic has lagged about a quarter behind what we're seeing with engineered materials, but copper is definitely moving in the right direction, and we anticipate that recovery continuing. As with our beryllium aluminum business, the expansion of 5G networks and the Internet of Things is also increasing demand for copper products, given how vital this metal is in computer chips and virtually all electronics applications. One longer-term trend we are watching closely in terms of its impact on our copper business is electric vehicles. As the electric vehicle revolution continues to advance, demand for copper and copper alloys will grow as well. This is because electrified vehicles use a lot more copper than conventional vehicles. For example, the average gasoline-powered car uses only about 48 pounds of copper, mainly as wiring. A hybrid car uses about 88 pounds, and a fully electric car uses roughly 183 pounds of copper. Not only that, but the millions of EV charging stations that are planned for deployment will drive copper demand further. Each of these uses about 50 pounds of copper. Our copper division already produces alloy products for the automotive space. We see the huge market shift to electrified vehicles as a growth opportunity for us going forward. Finally, let me note the progress we are making to expand and modernize our copper alloy facility in Franklin, Indiana. As I mentioned, this expansion will facilitate the consolidation of casting operations in Missouri and Pennsylvania and should help us to achieve some expanded production capacity and increased sales, improved lead times to support higher sales, substantial annual cost savings, variable cost savings through better labor utilization and increased production efficiencies, and funding for additional feedstock, which can drive new sales. Thank you.
Thank you, Mark. Let's take some questions now from our audience. For those participating on the webcast, you can type in your question in the webcast tool that's on your screen and click send. For those who are participating in our listen-only phone line, you can pose your question to me via email at jim.sims@ibcadvancedalloys.com, or feel free to text me at 303-503-6203. While we wait for some other questions, we did have a couple of questions, Mark, that came in early. Let me pose those to you. Number one, can you talk about the impact of moving the Pennsylvania facility to Indiana? Does it have an impact on the production cost? Are there other advantages or disadvantages, and how do you expect that to be funded? A lot of questions in one.
Yep, no problem. First of all, consolidating our Missouri and our Pennsylvania facilities into Indiana creates multiple positive points for us. Number one, electricity rates are lower in Indiana, so we will save money on electricity. We'll have much better management control over the entire operation, so we'll get better utilization of employees and higher yields from our foundry processes. These will all decrease our annual costs for the year, and that's a substantial decrease that we will realize, but it also gives us more capacity as a company. We'll be able to produce more material for our customers. And another final point I'd make in terms of benefits is that we'll have more material readily available on the floor, so to speak. And this has become a more important issue for us and our customers as people get more and more used to this just-in-time delivery. There are multiple sales opportunities that if we had the material on the floor, we could achieve, whereas if we don't have the material on the floor, our customers are going to go to another supplier. So we anticipate increasing sales while we're at the same time decreasing our costs. In terms of how we'll be funding this effort, we are in the middle of negotiations on multiple financing opportunities. Those will be announced as required as we go. But let me just suffice it to say that we are a very heavy asset-based company, and we'll be using the assets that we have as collateral for a lot of the financing that we're putting together for this. But I'm very confident in the financeability of this project and having it done before the end of the year.
Okay. Here's a question, Mark. Will you have to halt production at your Pennsylvania facility during the move to Indiana? And if yes, for how long?
Yeah, there'll be hopefully very little interruption in production, and that's because Mark Wolma and his team, Mark runs our copper division, have really thought this process out very well, and they're going to be producing in Royersford, Pennsylvania, as long as possible, and they'll be moving certain pieces of equipment, including new pieces of equipment, into the consolidation project at Franklin so that we can be producing in both locations simultaneously. Clearly, there will be some level of disruption, but we anticipate that disruption to be fairly minimal. And our goal here is to have as little disruption as possible, and we plan to build some inventory, if at all possible, prior to those final moves of equipment from Royersford to Franklin, Indiana. So, yeah, there will probably be some impact because it's almost inevitable, but I think the planning process that our team has undertaken really minimizes that to the maximum extent.
All right, our next question, Mark, is copper prices, like many things, are very much higher these days. Are copper supplies available or getting a little bit tighter?
We're not seeing too big of an issue in terms of obtaining the supply, but obviously those prices are going up. And I am very happy to report that our copper division, for the most part, has passed through cost for copper that goes into the products for our customers. So we see very little impact to our bottom line as a result of those higher copper prices. You will see our revenues increase, obviously, but I think you'll see very little impact otherwise.
Okay. Here's a question, Mark. We saw that you expanded your business with Lockheed Martin. Do you anticipate more defense contracts coming forward in the future?
Absolutely. The performance of the Engineered Materials division has just been outstanding. The reliability, meeting spec, they've really performed exceptionally well, and that has been noticed by not just Lockheed Martin but others. We've announced some other sales as well. I believe we announced one with Raytheon recently. Those are the types of inquiries that we're getting, quite often at this point in time, because the Engineered Materials division has proven themselves as a very capable, low-cost supplier of these parts to these defense contractors. So we're anxious for more and more inquiries. We're sending out proposals and quotes for various parts as we're being requested to, and I think we'll see all of that continue to add to the existing sales that Engineered Materials already has.
All right, here's a question, Mark. You mentioned the increase in demand that you're seeing because of the semiconductor chip shortage. How is that translating into business for the company?
It's translating into a very, very high demand by our customers to get more and more of these beryllium aluminum parts out to the chip machine manufacturing companies. We make a product called a FlexLink. Historically, we have produced about 200 of those FlexLinks per week. We're now producing over 500 per week, and our customer would like to see even more produced per week. And our team out at Wilmington, Massachusetts, again, I can't compliment that team enough, just like the copper team. When those demands hit and we have to more than double, almost triple our production levels, the team as a whole figures out how to do it and how to get it done in the fastest time possible, because that customer is very important to us, and we want to make sure they're treated as well as possible.
All right, Mark, here's a question I'll pose. I'm not sure you can really answer it, but is IBC still a candidate for a merger with NioCorp in the future? And if so, what would be the trigger?
Yeah, I apologize, but that's not a good question to be answered on an earnings call, so I will avoid that question.
Well, they asked it, so we're going to pass it on. Unless there are any other questions, and I don't see any, let's go ahead and end our call today. We really appreciate everyone joining us. As I mentioned, a replay of this webcast will be available on the IBC website in a few hours, and that's at www.ibcadvancedalloys.com. If you have follow-on questions and you weren't able to pose them, please go ahead and send those questions to me, Jim Sims, at Sims, S-I-M-S, at ibcadvancedalloys.com. We hope you have a great day, stay safe, and we look forward to talking with you soon. Bye-bye.